Hello and welcome to another episode of NSE FinWiz powered by CNBC TV 18 Season 2. This week we're at the corporate office in Ahmedabad of the pioneers of denim in India, Arvind Limited. Arvind Limited was set up in the year 1931 with the aim of manufacturing high-end superfine fabrics with state-of-art technology. The company not only took up spinning and weaving of garments but also invested in dyeing, bleaching, finishing and mercerizing, which was rare in those days. In no time, Arvind was recognized amongst the leading textile units in the country by steadily producing high-quality fabrics year after year. Arvind Limited has carved out an aggressive strategy to escalate its current operations through globally accredited manufacturing facilities. With their growing global footprints, Arvind has carved a niche with brand names like Arrow, Flying Machine, USPA, Newport, Megamart and the Arvind Store. Today, Arvind has diversified into other major segments like fabrics, garments, advanced materials, chemicals and dyes, retail, engineering, real estate, sustainable agriculture and telecom. Focusing on our theme for the series, NSE FinWiz visited Arvind Limited in Ahmedabad to gauge thoughts and notions of the young employees on investments and financial planning.
The professional advice is always most influential in taking all the investment decisions. But apart from professional advice, reading in the newspapers or getting information from the newspaper or informations from relatives or friends is also sometimes helpful to go for the investment.
Till now I have not invested much actively into financial markets, but yes, I have invested in fixed deposits, something which is very secure, which is helping me to make myself very secure before I actually go for unsecured things and venture into financial markets. So my investment till now has been restricted to fixed deposits and maybe insurance, health insurance I have taken that.
So for short-term investments, I usually invest in the recurring accounts and the fixed deposits for the 5 years plan. And again for long terms, I invest in mutual funds, gold, and also like one housing loan is going on, so in properties because real estate is booming up.
I have been investing from past 2-3 years and I do invest in fixed deposits, gold and property, and would like to explore more on SIP, which is systematic investment plans.
I think one question that is there on the mind is that while there is a good return or the good rally which the market has seen in last 6 months, what is the outlook, let's say from 2 years from now, and if you were to take long-term bets, then what is the advice that the financial advisor can give on the stock market?
Well, I'm now joined by two very special experts, and we have Roongta, who's the CEO at Apnapaisa.com. Welcome, Harsh. Harsh, first question to you. We're in Gujarat, we're in Ahmedabad, and Gujaratis are supposed to be really savvy investors. They have their finger on the pulse of the equity markets. But for someone who's just getting into the equity market, they'll be overwhelmed by what the current scenario is. Markets are high, Nifty's 8,000 around. What's your advice to them, how they can get into it for the long term?
See, I think if you talk of a lay investor, then we're talking of somebody who's just coming in.
That's right.
I think before you start any journey, any investment is a journey, right? Before you start any journey, you need to map out your journey. Where do you want to go? What are the various roads that will take you there, right? If you plan it out well in advance, you will do well. You can then decide that this is the reason, this is the places I want to go, and you plan your vehicle accordingly. So equity, obviously for somebody who's young and coming into the equity market for the first time and whose most of his goals are very much into the future, very clearly equity will be a significant component for him.
So for asset allocation, which is again a very important bit, but people very often are confused what asset allocation means and how to go about it. So if you could shed some light on that. I want to ask you something, is what are some of the common hurdles, some of the common missteps that layman investors fall for when they start investing?
So I mean, there are some pretty common mistakes that most of us make when we start, and I think if we know about them, we probably will not do it. And I think if I was to shortlist one of them, okay, I would shortlist what I would call the disease of maximizing my return, right? Okay. Now, I have started out investing. I thought I was smart, so I said, okay, I need this money after 10 years, so I'm going to do this systematically, right? So I planted a tree, and I know I need the fruit after 10 years. I'm watering it, I'm doing everything right. So that's all the right things that I did. But then what I do, every day I take it out and see, is it growing? No. So I keep it back. Is it what, I mean, equities take time to give returns. Equities are going to go up and down. But one thing has been proven by past track record, that if you have invested systematically for at least 10 years in equities, you have made money. Okay. So over long term, all these things go, they equate themselves and you get a nice good return. But unfortunately, most people, because they keep watching it, okay, they're damaging their return, and then they typically tend to quit when it is at the lowest. They say, oh, this strategy doesn't work for me. It works for the rest of the world, but it doesn't work for me. See, I made a loss.
You just mentioned about asset allocation, and I've just started a job 2 months ago, not yet exposed to the markets and all. So I would like to know what are the various streams in which we can allocate our money and which would pay off better and early.
I want you to also come in on this point, because there is an equation that people talk about. 100 minus your age should be invested in equities, and the rest can be in other assets. So kind of basically asset allocation there itself. But is that a ratio to work by, or how does it work case to case?
So, okay, if I was to answer, Akshita, I would answer it a little differently. Okay, all that I would say is, logically, you just started work, right? It's still not very clear what you need money for, when do you need it. It's still not very clear. To most people your age, it's not clear. Okay, I think at your age, till you figure this out, at your age, what is more important is getting habituated to investing. And what we like to tell our clients is, treat what we call the 80-20 rule. 20% of your income is not yours. Take that out. If your income is 50,000 rupees a month, treat your income as 40. That balance 10 needs to be invested month after month after month.
I just wanted to ask, when it comes to investments, investing in a government bank versus investing in a private firm, is there a difference in terms of security at this point of time?
We're talking of fixed deposits
Yeah.
in a public sector bank versus a fixed deposit in a private sector bank.
Yeah.
So, okay, let's talk of, rather than talk of public sector bank and private sector bank, I think the key is, how do you judge fixed deposits per se? Okay, and I think the best way to find that out is, what is the interest rate you're getting paid? Okay, if the interest rate that a particular class of borrowers is paying you is a little higher than what another class of borrowers is paying you, there is a higher risk. Remember that equation we spoke about, risk versus return.